This is a request from a member of the Tykr community. In this video, I will review Gitlab to find out if it's a buy or sell. Before I dive in, if you're new to investing or want to get better at investing, you're in the right place. We use Tykr to know where to start, what to buy, and what to sell. All right, let's take a look at Gitlab, ticker symbol GTLB. Before I use Tykr, I'll give you a little overview of the company. So Gitlab was founded in 2011. They're headquartered in San Francisco, and they have a global footprint. They serve customers in the US, Europe, and Asia Pacific. And their IPO, they officially went public in 2021. So what I like to do before I invest in a stock, of course, I need to understand the business. So what I'll do is go to Tykr, click on the details tab, and then kind of read a little synopsis about the company. Then I'll go a step further, just scroll down. You can click on the website. And what I always look for is a product or services tab or something like it to understand how do they make money. So you can see here, Gitlab, they've got platform and solutions. I'll kind of summarize what this company does. So it's really focused on helping software engineers. It's an IT tool essentially. So it helps with source code management, issue tracking, code reviews, continuous integration, project planning, and DevOps. Essentially, if you're writing and deploying code, this is a necessary tool to make sure you're staying organized, making sure your code is secure. So really important for software engineers. I also want to highlight their customers. This is really important for me when I'm looking for a business. I want to know who do they serve, especially if it's a B2B play, and I want to know what logos are on their resume. So I've got this case studies page here I found. You can see here they serve T-Mobile, NASDAQ, Siemens, NVIDIA, Goldman Sachs, and more. They get some really big names on their list, especially everybody's talking about NVIDIA. So that's a great place to be. Good for Gitlab for bringing on some major names. All right, now let's dive into Tykr. We're going to walk through what I call the 7. It's the 7 easy steps or key steps to make sure you find a strong stock. We'll take it one by one. So here we go. The first thing we look at is the summary. Stocks in Tykr are either on sale, watch, or overpriced. We can see this stock is a watch, so we're over 1. Next up, we look at the score. The higher the score, the safer the investment. What we do is we look at the financials. You want to look at the overall fundamentals or financials to make sure a stock is a good investment. You can do this manually by going to like a Yahoo Finance or MarketWatch and walk through their income statement, cash flow statement, and balance sheet. This platform really saves us a lot of time, so we don't have to worry about that. But I'll summarize what we're looking at. On the income statement, we look at revenue, net income, and EPS, and we want to see these numbers increasing quarter over quarter over 4 years. Next up, we got the cash flow statement. Free cash flow is what we're looking for. We want to see this number increasing quarter over quarter over 4 years. And then the balance sheet, we look at assets, liabilities, debt, and equity. With asset and equity, we want to see those numbers increasing over 4 years. And then liabilities and debts, we want to see those moving flat or moving down. All right, so that's the score. So we're at a 50. 50 or higher is good. So we're a 1 out of 2. Moving on to number 3, which is the margin of safety. We want to see that 50% or higher. In this case, it's a 13%. What we do is we use the EPS growth rate to calculate the share price in 10 years. It's a very conservative estimate. In this case, we can see fair value at $68 in 10 years. It'll probably hit that less. But anyway, we like to see a higher margin of safety. In this case, 13%, not quite there. So far we are 1 for 3. Then we move to the middle. This is the 4M confidence booster. I'll keep this really short. 4 M's, you get the math part of investing is the first M. Then the second M is the meaning. How does the business make money? How many revenue streams does the business have? And how scalable are those revenue streams? The third M is the moat. How does the business compare to other businesses in the same sector and industry? And the last M is the management. That's the track record of the CEO. Doing an analysis on all 4 could take you hours, if not days of homework. We reduce it down to seconds thanks to OpenAI. So looking in the middle, we want to see an 80 or higher. Anything that's a 59 or lower is a sell. So we're at a 45 here. That's a really bad sign with Gitlab. I think it's a cool product so far, but would I invest in it? You really need to be a strong business if you're a public business. Sure, this business is helping a lot of people, but when you're a public business, you really need strong financials to get the confidence and backing of institutions and retail investors. All right, so far we are 1 out of 4. Let's keep going. Down to the 5-year returns. Now we know this stock has not been around last 5 years because it's a recent IPO, but this is going to take it as far as it could go. We're sitting at negative 43%. The S&P 500 has been skyrocketing this year. For context, you can go to the dashboard in Tykr. I've got this module here, S&P. Let's go to year to date. We're at 28%. So Gitlab is not even keeping up with the market. In this case, you might as well just invest in the S&P 500. So far we are 1 for 5 on the 7. Let's keep going. Then we move over to the financials tab. The number one most important line on that income statement, cash flow statement, or balance sheet is EPS, earnings per share. And we went 3 consecutive quarters of this stock increasing. And in this case, it's doing exactly that. Look at this. It was negative 35 cents, then up to positive 8 cents, then up to positive 18. That's moving in the right direction. So we are 2 for 6. Last tab to go to is the earnings calendar, and we want to see 3 quarters where they are beating their estimates. These are the 2 key lines. Every earnings report, institutions are paying the most attention to EPS, making sure it's increasing quarter over quarter, and they're beating those estimates. In this case, definitely beating. Check this out, 179%. 51% and 53%. Those are some big numbers. So we're overall in the 7, we're a 3 for 7. To me, just to get right to it here, summarize what we're looking at. I would not buy this stock. I do not have enough confidence. Again, when I look at a stock, I'd like to see 5 out of 7 of those criteria being met. So in this case, what I would do is add Gitlab to your watch list. And when this stock changes from watch to on sale, you'll get notified automatically. And that may be an opportunity to buy. Of course, only buy stocks if they align with your own personal financial goals. And this is not financial advice. All right, what stock do you want me to review next? Go ahead and comment down below. If you like this video, hit that like button. If you want to see more videos like it, hit that subscribe button. And of course, if you want to buy and sell stocks on your own with confidence, I invite you to join Tykr for free. All right, we'll see you in the next video. Bye for now.